Hi friends, welcome back. Now we have second companies to talk about. So for those who didn't watch the first video, we actually talked about Palantir. Now we are in the second segment, which is talking about C in more details. So this one will be like TCSS sessions where Jay will do some presentation on the stock, and then I will have some Q&A with him now. So and enjoy the presentations. Over to you, Jay.
Thanks, Boon. Remember to link the Palantir video up at the corner or something. Okay. Today we're going to talk. Okay, right now we are going to talk about C Limited. It's just very surface stuff, like normal chit chat session with Boon. Okay, so moving on. Quick intro of C in case viewers are not aware, which I think they should be if they are searching for C. Anyway, it's a tech firm with business spread across three areas. Garena, Shopee, and C Money. So Garena is the gaming digital entertainment platform, and I think they are really one of the leaders in the games development. Shopee, I think most of us should be aware, e-commerce platform. You just think of Lazada, Amazon. C Money, something that is newer, which is their financial service and payment provider. They are like a financial services and payment provider in Southeast Asia. So examples are Shopee Pay, S Pay Later, etc. Just like the Palantir's video, we will go through the good stuff and then the not so good stuff. And at the end of the day, we can exchange views on our thoughts on C Limited. So of course, along the way, Bunti can chip in his comments and views. Okay, quick one on their earnings report. I thought it's quite decent. Announced recently only, I think earlier this week. Revenue-wise, up 17.4% year-on-year, beat the estimate. EPS beat the estimate as well. Shopee and C Money are doing good. In fact, C Money, wow, it's a whopping 100+% increase. Garena is slowing, I think, because of the lifting of the pandemic restrictions. People are going out and stuff. We'll go into that later. Just some charts extracted from C Limited. So as you can see, in case viewers are the visual creatures, plus 17% year-on-year. I'll just briefly skip through 39% for Shopee. This is actually the C Money. Sorry, this is for the Garena. Yeah. Very funny. This one, they compare Q2 2022 with Q3 2022. But then when you look at the others, right, they compare last year's third quarter versus this year third quarter. Smart, right?
Not a good sign, no?
Leave it to viewers to interpret. Okay, so anyway, let's talk about the good stuff. Okay, now good stuff first. Don't talk about the not so good one. Okay, Shopee, largest e-commerce in Southeast Asia and Taiwan, still expanding, still growing. They actually entered competitive regions like Latin America and Europe. In fact, Brazil. In Brazil, they are actually the most downloaded e-commerce app since it's launched back in 2019. But I know they are burning a lot of cash. The one later stage, growth rates still very impressive, and I would classify them as one of the fastest growing e-commerce companies in the world. C Money, I feel this is actually the most promising segment for C Limited. Yeah, for long term, what you call that, sustainability. Yeah, and they have been reporting excellent numbers. So one day later, you can chip in your comments on the good stuff. I'll just briefly go through first. So right now, the good stuff is that they are pivoting from their cash burning strategy. If those people who have seen the the conference call, they would have noted that Forrest Lee mentioned this, that they are shifting from growth to self-sufficiency and profitability. I didn't watch the earnings call. All this I extracted from online when I go through some of the articles. And they are also doing some cost-cutting measures. I think it's quite evident, as we can see from the news. There are a couple of layoffs. If I'm not wrong, I think 3 times this year. When you add it up, I think it's about 7K jobs, aka 10% of their workforce. And this is the classic bad news is good news. I don't know whether viewers have heard of this. Bad news is good news, and then sometimes good news is bad news. So bad news is good news means that layoff is a bad news, right? People getting retrenched or fired. But then somehow the stock goes up. It's very common especially in a climate like this. When there's bad news like US, they report high unemployment rate, then the market rallies. So that's the classic example of bad news is good news. Then good news is bad news is, let's say, job market is still strong, labor market is still strong, then the market tank because they foresee that the Fed will continue to tighten their monetary policy. So in a way, good news, and then it's a bad news for the stock market. Okay, anyway, drifted away already. Okay, let's come back to here. Interestingly, yesterday, I actually saw this article from Boon, but I don't know whether is it credible. It seems like they are giving up their 200,000 square feet HQ in Buona Vista. I think maybe viewers can also Google a little bit, especially those who are C investor. I think, yeah, this is probably one of their cost-cutting measures. And they are reducing their marketing dollars, and I can totally feel it as a consumer because I think there are lesser vouchers, and they they actually increase the minimum spend for free shipping, etc. So maybe at this point I pause a bit to see whether Buti has anything to chip in.
Yeah, nothing to add.
Oh, okay. Still I'm moving on to not so good already. How? Any good stuff to add or not, Bunti?
Yeah,
no good stuff,
yeah, I think you have summarized it well. It's not like I'm listening because I think the good stuff, right, just to show that how fast are they, when it comes to shifting the strategy and execute. So when they compete with Lazada in the markets, right, and this is talking about, like, let's say maybe 2 years back or 3 years back, right? So they are very fast. And then when it comes to a new market, they do all sorts of, that means they execute it very fast and then very effective executions and just grab the markets, right? So this is help them with the growth, and now comes to a phase where they need to cut the burn and need to become really cash flow positive, right? If not, they have to raise capital from the market, and at current environment, it will be a huge dilution. So they actually communicated this, and then very fast we can see that, okay, layoff started, and then all the all this marketing spends has decreased. So I can see that, let's say if I'm okay, again, for disclosure, I don't own C as of now, but let's say as an investor, right, when I see a management that they say something and you can see their actions and it happened in a very quick manners, right? This one give some confidence, like, okay, they are really doing what they say. So I think this one itself is a good thing. Why I say this is a good thing is because there are many companies, when they say something, right, they actually, when they need to do it, they kind of like very slow and drag and so on, right? So that one, you can see some, ding dong, all those are not a good picture, but at least for C, I would say that they really communicate it clearly and they really execute it, and we see that, right? And in terms of their burn, right, if you compare, let's say just Q2 versus Q3, you can see that they reduce their burn quite significantly. The question is more like what happened in Q4 and next year, right? Can they actually cut this to a break even?
Yeah.
If it is able to break even, I believe the share price will at least find some bottom. Because right now, they are, as an investor, for example, if you ask me, like, if I have money, do I want to put my money into C? My concern will be that I don't know how effectiveness in terms of how they're cutting the burn, right? Let's say if they are able to break even, that's good things. If not, right, then the concerns will linger around, and it's harder for the share price to improve. That's my take on this.
Sure. Thanks for sharing. Actually, I share briefly the same view as you, which is actually covered later on. So we sort of share the same view. Anyway, also for disclosure, I don't have C Limited in my portfolio also. I also almost entered, but then I also talit. Yeah. Okay, moving on to the not so good portion. I think when I did my research like last year or earlier this year on C, I noted their heavy investment in marketing, which I can understand why, because they are trying to solidify their leadership within Southeast Asia, because they are already the leader, and also to penetrate newer regions. So that's why they really dish out discount vouchers like free money, like raining vouchers. And then they are very big on brand ambassadors. And all these international stars you have to pay millions to them. I mean, just imagine how much do you need to pay this? Anyway, I'm a soccer fan. So I wonder how much they need to pay Cristiano Ronaldo to do that baby shark dance. I really don't know, man. So yeah, these are the money that they need to spend lah, to create brand awareness. Then the not so good thing is cash burning tactic cannot last forever. We all know. But earlier on we have shared they have been cutting down to lessen the loss, which is a good thing. But then okay, this begs the questions. Lesser points, lesser vouchers, higher spending to hit to get free shipping. All this will lead us to a question: will consumers stay loyal? So personal experience, I actually have switched from Lazada to Shopee a few years back. Yeah, just before pandemic. I think maybe 1819, really can't recall. And in my personal view, I think it's not very tough for me to go back to Lazada. Right now, when I do a comparison, I quite like Shopee's UX UI lah. I mean the overall user interface and you know how they gamify certain things. Yeah. And I also feel in a nutshell, it could be quite easy for, I mean, generally speaking, quite easy for tech-savvy individuals to switch between e-commerce brands. The most so-called relevant example that I can quote is, you know, Grab. I actually did a bit of study on Grab also. Back then I also wanted to buy. So it's like Grab versus Gojek, right, Tada? You know, many years ago, Grab can dish out vouchers like free as well, and then certain rides is almost as $0. Then along the years, they realized it's not sustainable lah. I mean, of course, they changed strategy. So ever since, to me, I will hop around Grab, Gojek, and even like Ride. So brand loyalty could be an issue for C, I feel. So that's the not so good stuff. Anything to add on? If not, I have a question for you. Next slide.
Sure. No question from my side.
Okay, so this is the net loss. Okay, so whenever a company, you know, presents certain things in a conference call, right? I think it's quite interesting because there are always two modes of views or investors. So for example, net loss. When you look at this, you know, Q3 they reduced quite significantly, right? So would you see as a net loss reduce significantly, or would you think that the net loss is still high in this climate?
Yeah, I think this one, right? Okay, there are two charts. One is the net loss, and then the right hand side is they exclude the share-based compensations, right? So there are two things I will pay attention to. The first one is mostly the cash flow part. Are they able to turn cash flow positive? For C, right? I think they will turn cash flow positive first before the net income turn positive. The reason is because when it comes to cash flow, they don't count the share-based compensations, right? So basically, this is if they're able to turn cash flow positive means that they don't have to raise capital from the financial market. But if they only turn cash flow positive, but net income is still negative, meaning that, you know, they are still issuing a lot of all these shares, and then it will be a dilution effect still ongoing. So at least you don't have to tap the market, because once you tap the market, right, like the market say, okay, you can just you know, like issue all these new shares, but the price, I mean, the share price that people buy, right, will be much lower, and hence it will be very dilutive lah. So that's the concern, right? Then secondly is the net income. For sure, we want the net income to be positive so that at least they don't have to tap the market, and also they will have some positive cash flow. They can ultimately use it for you know, pay dividends or do some share buyback to offset the share that they issues, right? So I think these are two things that, like, two different thresholds that we should pay attention to. So for now, I think the immediate attention is whether they can turn cash flow positive or not. That's why the left-hand side chart will be more important. So that's the first point. The second point is that, like, how, like, we do see some improvement, right, from second quarter to third quarter. 931 millions to 569 millions, right? So I think two things we'll look for, right? The first is the level. So 569 millions, is this still sorry, I a bit off already. I think I should talk about the right hand side, because the right hand side is the one that is closer to cash flow picture, right? So yeah. Now come back again. The 569 million net loss excluding share-based compensations in Q2 now improved to 373 millions. So like I said, we should pay attention to two things. One is the level, is the 373 millions. This level is a level that we are comfortable with because we can just do a quick calculation to see, look at how much cash they have, and then assuming that these 373 millions, if we stay constant, how long they can last, right? How long the cash can last them. So I think this is one. Secondly, is like the directions, right? Whether it's like deteriorating or is it improving or not. So here we can see that they improve roughly about 200 millions, right? So I think as an investor, I think many investors will actually do like an extrapolation, say, oh, they improve by 200 millions, right? So next quarter, can they improve? If not 200 million, maybe 100 millions, right? So for example, if they only like the net loss, excluding the share-based compensation is, let's say 250 million next quarter, and then 100 millions another quarter, then finally become break even in, let's say like Q2 or Q3 next year, right? Then I think that one is a good picture because now we can say, okay, it's like very, very low risk of having have to tap on the financial market to issue new shares or take on more debt, right? So I think that's the things that we want to see as an investor. Not sure whether I think I talked too much already.
No, it's okay. I'm actually listening very attentively, and I think those are very great sharing points. And sorry, I just want to use this chance to rally viewers to join Boon's TCSS session every Sunday because I really learn a lot from you. So just like what you have shared over the last 1 or 2 minutes, I thought they are very valid, and yeah, I do learn something from you. Thanks for sharing, Boon.
Thanks for the promotion. But this one, I would say, as an investor, sometimes like you don't want to make a huge commitment to one single stock. The reason is because let's say in Q4, right? Let's say the 373 is not 373, but let's say it just dropped to 400. So these kind of things, right? Suddenly you say, hey, 400 also is not like super big increase in the net loss, right? It's just like dropped by let's say like another 20 millions worse compared to the previous quarter. But because people will always extrapolate, they will say, wow, I expect some improvement. And now suddenly you say your net loss, excluding this SPC, suddenly become 400 millions. Then people will say, could that 400 million become 450 or 500 million the following quarters? And people, when they hope for improvement and they don't see the improvement, they will just sell the shares, right? That's why this kind of situation where it is quite critical whether the company, where investors don't have a good confidence that no more like, like raising shares, issuing new shares, right? They will pay a lot of attention to these numbers. That's why I think from the companies themselves, right, from their perspective, they also know that this is very important. That's why they have to resolve to, surrendering their officers and then like lay off their employees just to make sure that all these numbers are trending to the right directions. Yeah, because if not, after the confidence is gone, right? Let's say the share price now, I don't know how much is it now. Say if you fast forward 3 months later, they're trading at $20 or $15. And then these numbers still negative and they run out of cash. What can they do, right? They still have to issue new shares in just to stay solvent, right? And then that one will be like very, very dilutive. And if that happen, right, whatever loss that the investor is experiencing, right, it will become a permanent loss already. Because you see there's new investor that join in at $20 or $15, and then they already own like, let's say a sizable portions, right? Say they could own 10 or 20 or even 30% of the company now. So from that point onwards, even if the companies become profitable, right, your shares already diluted. So it becomes like a permanent loss. Whereas for the new, like those who subscribe to the new shares, right, they are the one that profit from this because they get to buy at much lower price level, right? So for companies that is like, no cash flow is not positive one, I think these are the things to pay attention to. The risk is there. It's seriously there. It's just that whether like we want to bet on they can become like, cash flow positive or not. That's the decisions that we have to make.
I just wanted to add on to one of your earlier points. You mentioned about like, if let's say the next quarter's so-called net loss, if it's not too bad, maybe increase by a little bit more, some investors may just feel that, hey, based on my earlier projection, it seems like you should be reducing. How come it increased? Then people may sell. I think this is where savvy investors should really do their duty. Again, like what we mentioned earlier, deep dive, understand why there's this increase in the net loss. Although on paper it seems like by right every quarter should start reducing. Yeah, and this also brings me to this current quarter. Yes, there's a significant drop, but then just like what the Fed has said, 1 month or rather 1 quarter or rather one data point is not sufficient to make a conclusive to make a conclusion, I feel. So say, for example, next quarter, the loss is still about the same or maybe even increased by a little bit. I think the market can react, they can dump, but then if let's say you have conviction in a company or you believe in a company, then that's when investors should dive in deeper to understand why. Shouldn't be too bothered by just 1 quarter of increased loss. So likewise for this quarter, even if it dropped a lot, shouldn't be too excited. Should dive in deeper to see whether are they doing the right stuff or what actually caused the drop. So in this case, we all know it's the cost-cutting measures, the laying off, etc. And then this brings us to the next question, whether is this sustainable? Can they continue to do this, etc., etc. Moving on, still got a not so good. Okay, very briefly, actually more or less just 3 big pointers are one, I feel this is my personal thought. Actually, Lazada and Amazon can be quite aggressive if they want to gain market share in Southeast Asia. And then for C to penetrate into some of the European regions, they are facing a lot of other competitors, not just Amazon. I think in the Latin America, there are 1 or 2 apps that are posing quite a fierce competition to Shopee. So the not so good stuff would be some of the failed launches. Okay, again, 2 sides to a coin. Some may see all this as failed launches. They went into India, they pull out. Even there's this gaming Free Fire that got banned. They went into Colombia, Mexico, etc., Argentina. Then they also exited. Yeah, but from another perspective, you can also say that, hey, Shopee is very swift and decisive. They went in, they realized it's not working, they pull out. So in terms of cutting costs, I think rather cutting losses, they're quite fast. But I mean, some may also argue that, hey, so many exits, is it because they haven't done enough homework? Or maybe they are too ambitious, they are expanding too fast. Then the not so good part on Garena is falling profits. I think we all know during the pandemic period, that's the main revenue driver. And then right now, a lot of restrictions have been lifted. So that's why their profits drop. And I think this is the same for a lot of other pandemic stocks like Netflix, Zoom, etc. So you have anything to add on, their failed launches and all this?
I would say it's quite hard for them also because when they enter all these markets, right, I think the time is really good. In fact, we are also quite optimistic on a lot of stocks, and then even I myself, I also bought like companies. I also bought into C when they are expanding, right? Because we can see that their executions, there's some success in Southeast Asia. Basically, they just want to replicate.
You had them in your portfolio earlier on?
Yes.
Oh, okay.
I sold, but then
see.
it's as in I do see, because when I bought into the companies, I also see that okay, they are good at execution, they are able to grow, they are able to grab the market share, and then to just set up like a website in a certain country isn't that hard. They just port over, then they have the UI already. It's just that the underlying all those to set up the logistic, all those things. I think that one will take a bit of effort now. But just to talking about all this expansion, I think when the time is good, right, and they're expanding, I do see that as like a good actions or good decisions to do all this expansion. It's just that once they see it doesn't work, then they quickly pull off, right? Also, I think this is like just to show how nimble they are when it comes to like geographic expansion. So I do see this one as their strength and not a weakness. It's just that the situation, all this, like the macro environment, all this turn in a very, very fast speed. And that's why it's a bit of mess when they after announce like exiting France or Spain and then keep exiting here and there, right? I think it looks quite messy. I think, but it's quite tough for them because of how fast the environment changed, right? So I will give them the benefit of doubt. I will say that this is, I mean, they operate in this kind of business. This is what they have to do. Like they have to be very comfortable of like getting in and getting out. Although it's messy and it doesn't look good, probably there's a lot of costs involved also. I think that's fine as an investor, but I would say that now it's really a tough period for them because of all these cash burning situations. So I think they're still in like we call it headwinds now. So a lot of challenges that they're facing now. But as long as they get past this, right, I do see that their future will be very bright now, because basically you have like the core teams, right, will be very strong in terms of like navigating all these different challenges, right?
Talking about nimble, Bunty, you also quite nimble. You realize you went into C, you exited. Meta also, you went into C, then they plummeted. Just before they plummet further, you exited also.
Yeah, my channel is invest for the long term. But talking about stocks, this one I sold, that one I sold.
No,
I
think it's
think
okay. It's
people,
like what you say, being nimble and like what they always say, don't get married to a stock. And I think this it depends on the investor's style. And they always say look at the fundamentals. So if fundamentals change, I thought it's okay to sell. Yeah.
For me, right, it's not like if they're bad, then I'm sell. It's not like that. So for example, talking about C, my stake is kind of like not so big. I think just like, like I think mid 4 digits. I don't recall exactly. It could be like 3,000-4,000 at its peak, and then as share price move, the stake, the investment size also move, right? But it's not a big positions for me. And then secondly, I always ask myself, right, okay, whenever they have all these challenges, right, I will ask whether I want to bet on it or not. For example, for C, right, if I continue to hold on or I add to the positions, right, it is like I know they are facing challenges, but I want to bet that they are able to cut all these costs and they are able to flip to positive cash flow, and then like they will survive this basically. So this is something that I ask myself whether I want to bet on it or not. If the answer is no, then I just sell and I will just put in other companies that I have more conviction on. So I can give another example where there's companies facing challenges that I'm not selling, right? Say for example, like TSMC, at its peak $140, I still add because I think it's a good company. And then now with all the semiconductor slowdown and so on, right, their share price dropped to like 60 plus, and I'm still holding on it because to me, this is the headwinds that they're facing, which is like the slowdown, their customer cutting on orders and so on, right? But I see it as something like a cyclical things, and I'm okay to hold on to the cyclical, the down cycle. It's not like down cycle I cut and then I wait for the up cycle that I come in again. I don't do that kind of things, right? But come back to see why I don't bet on that is because I think there's like a risk of like a permanent loss there. Like let's say if they're not able to become cash flow positive, the moment they say they have to raise, let's say a couple of billions from the market, right? Then I think that's a bit like a permanent kind of loss to the shareholders because of it will be very, very dilutive. So that's the things that I try to avoid, and I don't have a good understanding on whether they are like I can't say for like 80 or 90% chance that they will be successful on turning positive cash flow. If that's the reason I'm not betting on it now. So and it's okay for me to get in and out because of the position is small. Like I'm not that married. But there are some positions that I kind of like a bit more married to the stocks also. That's why it will be harder. I could trim, right? It's not like just a binary in and out, right? I could also trim. I also trim for some of the position that I had also, like just want to make a decision that is not binary, right? Yeah, sure. That's the story from my side. Like,
no problem. I think
again.
Thanks for sharing your thought process when it comes to trimming your portfolio. But a quick question before I move on. So when you trim off this C Limited, right? Did you profit? Did you get it earlier and then before they drop down to the current price? Did you profit?
I think I cut a loss one. Yeah.
I see.
Same based on what I remember, right? C Limited cut loss, and then for the Meta also I sold it at it's a loss. It's not like a gain. Yeah.
Moving on, this is just one question that I thought maybe investors can think about like, still cash rich with 7.3 billion or falling cash amount. you want to share your views or we move on?
No, this is basically what we have been talking about just now, right? Like you look at this number and then you want to make sure that this 7.3, it can drop to 654, but it shouldn't drop to like, below a couple, let's say 2 billions, because they still need some cash for their operations on. So it's not like they can drop to zero, right? So there will be a level where they have to come out and say, okay, we have to raise capital. And the question is, will they fall into that level or not? That's the things that we need to watch out.
Yeah, well, actually, when I look at this graph, without diving in deep, right? If this carries on, right, I don't know how many quarters or can they continue? Yeah, so I think investors should also pay attention in this lah. I mean, look at this chart. Okay, then I'll move on lah. Personal thoughts. Again, I wanted to enter because I thought I quite like C Limited. So back then it was like 90 plus. I did a video with some research. Back then my thought was not a point to load up yet. And I thought 50 plus was a good buying opportunity. Very transparent. Now we are at 50 plus. Am I adding? No, I'm not adding yet. Yeah, because going back to the very earlier point that we shared for Palantir, I think maybe I still want to see more positive stuff. I mean, they are showing some positive signs already. I would want to see more positive stuff before I even consider loading up lah. So, but ever since I did that research, it was 90 plus, it has dropped by 40+% already. In a way, dodge a small bullet. I'm not saying I managed to, make this call right. They always say, everyone is a genius in a bull market, right? Actually, the same thing can be said for a bear market. Everyone is a bear genius in the bear market. Any companies that you say that you will drop, right, will drop. So actually, everyone is a genius because now no stock is spared. So all the stocks have dropped. So
before we move on, I just want to ask,
yes.
Say for example, now they are trading at 50 plus, right? So if let's say next quarter there are like serious improvement, so for example, their cash burn really cut significantly, right? And then you see the improvement that you wanted to see, but then now let's say the price is already at $90, for example. How will you act on that?
Two areas. I think one, of course, I will focus on C. We'll do all the necessary fundamental analysis. Yeah, this is just a very generic explanation. Then I will see whether at that point is 90 fair value. It may not be fair, it could be a bit rich in terms of valuation. But as what you mentioned, I will see how things have improved. Then I will do my analysis. That's one part, focusing on C. Second part, right, it also depends on the other stocks I have in my portfolio. Because right now, I'm busy picking up shares for other stocks. Yeah, so in terms of cash, I may not have so much. I want to focus on some other companies I have more conviction in. So if let's say I have some cash, or if let's say my other stocks have reached the percentage that I want, then I have some cash, I may nimble in, even if it's at 90, when I assess the situation, it got better, things are really good, outlook is good, then I think 90 I may still buy. Yeah.
I see. Thanks a lot.
That's my take. Okay. So I think it's the same thing. Say, for example, right now, 58, it seems like it was a good buying opportunity. I think it's still relatively a good buying opportunity. But right now, as mentioned, I'm so busy picking up the shares. So it's very tempting. I want to enter at 50, just a very small size, but I hold on because I am trying to pick up, like Tesla and all this. Yeah. Okay. Some quick stuff for viewers, short technical analysis, Boon, if you don't mind. So right now, this one actually was extracted yesterday. I think the price should be about the same when the trading hours closed this morning. Right now it's about $57, and then my view are not financial advice. Usually there's whenever there's a parabolic move up, right, it should usually come with a pullback, especially after earnings call. So I think we have seen that in Apple, Tesla, and the list goes on. So that time when C reported, not so bad earnings, they actually gap up. Gap up means they just jump up, and then there's that little gap, as you can see there, 51.3 to 55.4. So I am foreseeing some pullback. So if let's say, I don't know, viewers, if you feel that you want to pick up some shares, not financial advice again, if you want to wait a little while, I foresee there could be some pullback at least to the 50 moving average or even to fill up the gap. So from $57, if you drop to say maybe the 50 moving average, which is about $53 or maybe $52, that's actually another 8 to 9% drop. So, I mean, if you can save that 8 to 9%, if you want, you can wait. Otherwise, by all means, not financial advice, just for viewers to think about. Anyway, this is usually what I present in my video. Okay, but
yeah, need to subscribe to your channel, subscribe to your channel to get all this good stuff.
Okay. Actually, I'm a long-term investor. So all these are just because I like to read all these charts. Though I'm also not a very seasoned technical traders or what. Yeah. Okay, let's move on. This one out of the topic. Personal thoughts. Very quick one. I feel we are not out of the woods yet. After years of burning cash to fight the market, I think it's good that they are pivoting. And as we can see, quite evident, cost-cutting measures are taking effect. So right now, I will classify C as moving, not classify, I would see them as moving on from the very initial, fighting for market shares, like Grab's initial stage, they are fighting for market shares, dishing out lots of discount vouchers. So I think right now they are moving to the second stage, the next stage, which is cutting down on all this, free discounts, etc. And they are focusing on profitability and retaining market share. So right now, we need to see how they can retain the market share and how they continue to reduce their cash burn line, of course, bring in revenue, and of course, to fulfill their goal of achieving profitability by end 2023. I think that's what they said, right? If I don't recall wrongly. Personal thoughts, why at 50 plus I still not entering? Because I think global economy is still not in their favor. And I think this weak economy will quite definitely stretch into 2023. A potential recession is coming, or some may say that we are already in one, a technical one. Yeah, and I think we will have a better sensing after the latest wave of tech layoffs, because right now the unemployment rate is still quite healthy, but then all these 10,000, 7,000, all these layoffs and firing, we may see all this effect. All this impact maybe next quarter. We don't know. Maybe all these tech talents can still manage to find jobs. So maybe the next quarter's unemployment rate may not still be high. But nevertheless, I feel such growth company may still struggle, not just may still struggle in a weak macro environment with the rising interest rates, hot inflation, and slowing economy growth. In fact, the big firms are also facing these headwinds, so let alone such growth company. But of course, two sides of the coin, I think they are good in terms of adapting quite quickly, like what you said, nimble. And yeah, because of their so-called pivot strategy. So to sum this up, C needs to weather the storm. Yeah, the sea, very choppy sea now. So the sea is very rough, very choppy now. But then again, a smooth sea never made a skilled sailor. So if too long that didn't read, I feel there are more risks for sea coming up at least to Q1 2023. But then I do feel they have great potential. Is one company that will be on my watch list. I think that's for C.
I wonder whether it will stay on watch list for only stay there and never move to your portfolios, because you already have your own, like your portfolios of like companies that you like, right? So sometimes it's harder to squeeze in, not to.
It is.
Yeah, not particular on C lah. It could be a good companies, but it's not as good as your portfolios. Then also hard to fit in also, right?
Yeah, you're right. You have anything else to add? If not, the next slide is wrap up.
Yeah, I think we can go to wrap up.
Wrap up is, what did I write? I think wrap up is really for Palantir and C or even growth stocks in general. I think investors must be comfortable with volatility if you wish to invest in growth stocks. You have to understand the various risks for growth companies in general. And also be wary of confirmation bias. Why I put this here? Because I almost fell into this trap when I started investing, because I will tend to find things to justify my thesis or narrative or belief. Like, I'll find like, hey, wow, this company quite cool, like, what the good stuff, etc. Then the more I hear from all these people, when I read all these articles, I feel very confident. Yeah. Then and I think one thing to highlight, what we learned from this 2022 bear market is usually unprofitable when growth stocks are the first to go. So if you're a chart reader, you look at a lot of all the pandemic, we call it pandemic stocks, right? It forms a bell curve. Bell curve as in, they actually started quite flat, then they jack up, like a big bell curve, and then all came back down again. I think a lot of stocks actually went back to pre-pandemic high or even hitting pandemic low. So it's forming like a bell curve. So it's a bit like a lost COVID years. The 2 years practically wasn't present at all. I think because of Fed's free printing of money. So going back to this point, I think in bearish climate like this, usually I think growth stocks will be the first to dump by retail and institutions. I mean, we all know hedge funds, institutions have very big position in like Apple. So if let's say they are going on risk off mode, I feel the last one that they will trim is Apple. And then if let's say Apple also get trimmed, can you imagine all the kucing kurau stocks? Yeah. So last point, I always like to preach this: raise your knowledge before raising your holding. So don't just, at least for me, don't just DCA blindly like, drop buy, drop buy again, DCA, average down. I think when things change, it's time to raise your knowledge, dive in deeper before raising your holding. So I think what you have mentioned earlier on, I think it's quite a good point. Like some of the companies, you didn't trim them, although you are in the red, because you actually did a study. You understand that, say, all this will come back. I mean, all the ad spending, or even the chip industry will come back. So you understand the risk, you understand the reasons behind the drop, and then you further so-called load up more shares. And then some companies you feel that, hey, fundamentals have changed, or the whole outlook has changed, like for Meta, and then you decided not to gamble on their future. That's when you raise the knowledge, then you did not raise the holding. So I thought that's some takeaway. That's all from me. Boon, do you have anything to add?
Yeah, I want to echo your last points, talking about this, like the hype that we're feeling and all this, herd mentality really affect all of us. I also think that it's like, environment, like the current environment where, most of the stocks is falling and then some drop by 70-80%, right? I think environment like this also like teach us to be more disciplined and also be more thoughtful when it comes to like deploy our capitals. Because before this, right, when the stock is going up, right, everyone just buy and then you see like a green numbers in your P&L, right? Then everyone just be happy. And then that kind of environment, if it lasts too long, right, it become like, it make us less disciplined. But now you see every companies that we talk about, right? You mentioned about like in the first part we talked about Palantir, and then people will talk about stock-based compensation, are they profitable or not? This kind of points, like negative points, right? You don't see people talking about this when the market is good, right? But all these points, it will surface when the market is down. So I think we should really like, take note of what we are thinking of, take note of the current situation to remind us that actually, yes, stock price don't go up forever. There will be period like this, and for every companies, whether we invest in or not, right, there are challenges or potential challenges that they are facing, or there are some downside or some negative or some bad economics that they are facing. All this, it will appear in every companies, and we need to like take this as an opportunity to remember, like, okay, period like this will happen one. Say, for example, let's say a couple of years later, the market recover, or it could even like rally to a high levels, right? We need to remember like this kind of like winters, so-called winters, right? It will come every couple of years. So if we have that in mind, right, then it helps us to position our own portfolio in the future, because we know that good times don't last forever, bad times also don't last forever. I think this one is, this kind of cyclical things help us to become more mature, and we are not like looking at the specific time period, and basically we don't treat ourselves as a genius when the market is good now, and vice versa as well. I think this one really is good learning for all of us now.
Yeah, I think it's a good point. You see, when the market is flying, right, all the risks become negligible. Then when the market is falling, right, all the risks are magnified. Suddenly people start to
Yeah.
scrutinize, how challenging it is to operate, etc., etc. So yeah, I think what you share is quite valid. And another thing I observe is we're talking about good companies. We all love discounted stuff, things on sale. But then, in a bull market when it's flying, when it's very expensive, a lot of people just, dump their money in. But then now when market's falling, for good companies, but then people are fearful to pick up the shares because they feel that, hey, it will just go lower and lower. Yeah, I think end of the day, doing research is important. That's the point. And conviction.
Yeah, because for just now when you say about the stock price lower, right? So say for example, it could be C or could be any companies, right? If you say, okay, I do a very conservative valuation, it is worth $10. But then now the price is $5, for example, right? Wow, huge margin, margin of safety, right? But when you ask someone, they say, hey, how come so cheap already? How come you are not buying? I think you don't have to talk about all the negative points, right? You can just raise one point, say, oh, even though it's traded at $5, it's worth 10. Why should I buy if I know it will drop to $4, right? You just take that as a single point, say it's going down and I'm likely able to get it at 4. Why should I buy now? So if that's true for one single person, it could be true for many investors, and hence it will go down to $4, right? So that's why the traded price can always like, deviate a lot from their intrinsic value just because of all this mentality, like the psychology part, and not everything follow logics. And it's actually logical for people not buying at $5 even if it is very cheap, right? Yeah. So that's the things.
Okay, I think that's all. Actually, next session. So, we can chat about meta, we can chat about macro. I hope we can have another session. Can talk about macro in general, year-end outlook, center rally. Do you think there'll be center rally? Have the market bottom? Yeah, we can catch up again. You have anything to add on, Bunti?
No. Sounds good. I think let's close the session. Thank you so much to Jay for doing all this deep dive on companies. At least if not deep dive, at least some discussion that's specific on the companies instead of talking about general macros, right? Because I think it's only when talking about the individual companies we can discuss in more detailed stuff.
That's true.
Whether this is detailed enough for the viewers, I think depends on the viewers also. Some may say this is like, oh, I didn't know about all this, right? But I think all this discussion is definitely helpful to at least give more insights on the companies. I do really like this kind of individual companies discussion. So thanks a lot for the sharing. I hope that we can do this more often, discussing about other companies. And let's say for anyone who is like listening, right? If you want to join this kind of session and you want to join the discussion with us, right? Do reach out to me, whether over, like just the YouTube comment sections, that's fine. Or you can come join the Telegram group and just let us know that you want to join, right? We can have like a couple of people having this kind of discussion. I think that's also quite nice. All right, I'll close the session here, the recording here, and say goodbye to all the viewers. Thanks for watching.
Thanks, Bunti.